It's time now for the morning trade, and we're watching Intel, which reports its earnings after the bell. Today, Marley Kayden is with me now, watching this name. What is the street expecting when it comes to Intel?
Good morning, Nicole. Yeah, the street is expecting EPS of $0.01 and revenue of $11.87 billion, which would be declines in both EPS and revenue for the quarter year over year. This is a really potentially important quarter, though, because it is the first full quarter under the new leadership of CEO Lip-Bu Tan. He took the helm in March of this year. So the market absolutely awaiting any insight into the impact of the strategic initiatives that he's put in place, also their overall performance and the future direction that he sees for them. You know, some of their financial pressures that they've had, they announced this cost-cutting measure, some of them considered aggressive. Their plan to reduce operational expenses to $17 billion. That's down from a prior target of $17.5 billion. Their CapEx is slated to decrease to $18 billion, down from an initial plan for $20. And of course, the layoffs that we've talked about, you know, they plan to lay off more than 5,000 employees here in the U.S., mainly in California and Oregon, saying that those reductions are projected to save $500 million this year, with a target of $1 billion in 2026. I know from reading several of the analyst reports that they're hoping that the company will quantify the total number of job cuts on the call today, get more insight into that. And it does look like the rebound does appear to be gaining some momentum, the street favoring some of these initiatives. You know, plenty left to do to get it to its previous highs. But right now, shares up 14% this year, but just in 2025, but for the full year, the last 12 months, down about 27%. So still a long ways to go, but the messaging on the call from their new CEO, Lip-Bu Tan, is going to be very important, Nicole.
It's interesting. I mean, this has been a wild ride. Remember that huge gap down and sell-off, and investors have had to be very patient on this name, but it has made somewhat of a comeback. The new CEO has been working on this turnaround plan. More on that?
Yeah, you know, he said that there is a need when he took over for significant both cultural and operational change. He did stress that. He also stressed the importance of realizing that turnarounds don't generally happen quickly. He acknowledged that they did some very good work early on, but that this was not going to be a quick process. So I think a lot of that was preemptive, knowing that they were anticipating an EPS and revenue decline for this quarter, his first full quarter at the helm. So I think some of that was in preparation for it's not going to be great, but it can be great. I think the messaging of his plan going forward, any other new strategic initiatives that they plan to do, and how they plan to create sustainable growth in this cost-cutting time will be very important on their call today.
Yeah, that's the big picture. And as far as tech goes, I mean, it's just been looking so good overall. Anything else you want to add? And then we'll get to Joe Tigay with some trades.
Well, as I was going through the analyst reports, analysts do seem to be really favorable and bullish about Intel right now. Most of them saying they do expect them to post slightly higher results. So whether or not that works in their favor, you know, we've seen in this earnings season, even if you post a beat, it doesn't necessarily mean an upward movement for shares. So I will be curious to see when it comes in how the market responds, knowing that several analysts are already expecting them to come in slightly higher than what's forecast.
All right, Marley Kayden, great to see you. Thank you so very much. Now it is time. Thanks, Marley. We're going to trade Intel. Joe Tigay is with me, portfolio manager of the Rational Equity Armor Fund, and you have an example trade for us. It's down almost 2.5% today at $22.94. How would you go about this example trade?
Yeah, I've just been following Intel for the past couple of years. I've been excited about them. Leading up to their last product release, the 18A chip, I was really excited. They finally got a smaller chip. It seemed like everything was working for them. They had a lot of the infrastructure in place. They're building more foundries. All of the production is there. We're in the middle of this AI boom, and Intel just can't get anything started. I think it's great news, and the stock was rewarded that they recognize that there's been a big problem with their leadership. I love the fact they went to a designer, an engineer in the CEO, Lip-Bu Tan, so I'm excited about their future, but it might just be too far in the future. I want to own this for the long term. In the short term, I'm not so optimistic. We're talking about them maybe doing better because they're cutting costs. Right now, in the tech world, we talked about Google's earnings. They rewarded Google for spending extra money. They're buying more data centers or building out these data centers. I don't think any Intel chips are going in those data centers, so I'm fading Intel for the short term. I want to own it for the long term.
All right, that's well said, and we'll continue to watch it, own it for the long term. The investors had to be patient, but they've gotten a nice year-to-date change, up about 15%. What are your thoughts on the market overall, that we're hitting some records here, not all sectors, not everything, but certainly notable. The NASDAQ and S&P are at record highs again this morning.
Yeah, it certainly looks great for the AI trade. The momentum trade is absolutely there. Seeing companies like ServiceNow out there having a great quarter this week, really excited about that. So it's kind of branching out. We had the hardware build up. We're still getting more hardware build up. We're seeing more and more software companies taking advantage of these big AI tools, these cost-cutting measures, these just productivity measures that AI is offering. So that's just the exciting spot that we're in. For me, we're in a really life-changing time period, and it's exciting to watch it play out just from a financial point of view, but also just a human point of view. It's just really exciting to see this playing out in real time, and we're just looking for the future, and we're looking for companies that are taking risks. We're looking for companies that are cutting edge, and really excited to see Google continue to do that.
All right, Joe, anything else I'm leaving out? I mean, are you a fan of tech overall?
Yeah, big fan of tech, big fan of the AI trade. Now, there's lots of other companies outside of tech that are even going to profit off of this AI trade. So it's really wide, looking for biotech companies to make the next leap. So really exciting time. All that said, we can't just think that everything is going to be hunky-dory and just go up forever. We have to continue to trade smart, continue to trade with protection. Volatility is going to remain elevated for me. We've got like the 17 area in the VIX where might be on the lower end of the range. So that's be an area where I can look to add some protection, watching this market go up, down, and all around. But at the end of the day, I think the market will be higher. Volatility will be higher, will be lower some days, but it'll end up back in the same spot.
Okay, Joe Tigay, portfolio manager of the Rational Equity Armor Fund. Joe, nice to see you, and thank you.